Hello. Today we're going to be talking about comprehensive income. Comprehensive income includes gains and losses. However, they are not included in the income statement. It is part of shareholders' equity, just like the net income is. However, these are comprehensive income are transactions that between the company and non-owners. So what do we mean by that? We mean that net income are transactions between owners, between the company and owners, because the net income that the company earns, assuming it's positive, can be paid out to the shareholders, whereas the comprehensive income cannot. So that's transactions between the company and non-owners. Comprehensive income consists of two components. Number one is that when you think of the net income, you think, oh, we're reporting all our revenues, expenses, and gains and losses. However, the net income that you see reflected in the income statement is all the revenues and expenses, but most of the gains and losses. There are a few other gains and losses that are not reflected in the income statement and is actually part of what's called other comprehensive income, which is also, you'll see it referred to as OCI. So when you take net income, which is from the income statement, plus other comprehensive income, you get to total comprehensive income. Here are some examples of other comprehensive income. There are some unrealized gains, losses on investments. These might be, depending on the investment the company holds, they true up the investment to fair market value at the end of the accounting period, and any gain or loss related to that true up is recognized as an unrealized gain and loss, which is part of OCI. So when you think about it, it's not a true gain. We didn't actually receive anything for it. It's just an adjustment. Similarly, there's a foreign currency translation adjustment when we report financial transactions abroad, and then we have to convert it into USD, US dollars. There's some foreign currency translation adjustments, and that gain loss would go through OCI, other comprehensive income. And then there's some pension investments that also go through OCI. These are not all the OCI items that exist. These are just some examples so you can have an idea. Here's an example of what a statement of comprehensive income looks like. And it's again it's a period of time, just like a regular income statement. It reports the revenues and gains, expenses and losses, and this $500,000 is the net income that you would see from the income statement. And then it reports the other comprehensive income items net of tax. This is really important. These are all reported net of tax. So in this example, we have a gain on debt security, loss on projected benefit obligation that has to do with pensions, and loss on derivatives. And then you have the total other comprehensive income here to get to comprehensive income, which is the net income plus other comprehensive income. There are two ways that you can report other comprehensive income. You can have one single continuous statement of comprehensive income, which would include all the expenses, all the revenues, expenses, gains, and losses from the income statement, and then the items of comprehensive, and then the other comprehensive income items. Or you can have two separate but consecutive statements where you have your income statement that we've been used to seeing, and then the net income from the income statement just flows onto the statement of comprehensive income as its starting point, and then we list out the other comprehensive income items net of tax. So I wanted to take you to see a 10K just so you can see an example of what this looks like. This is for Microsoft for their most recent 10K filings, and this is their income statement. And you can see here on the income statement that we have, they report their revenue and their cost of sales, and eventually they get down here into the net income number. And then we have our earnings per share reported. And then immediately following the income statement is the comprehensive income statement. And you can see on this top line item, net income, let's just take 2025 for example, is 101,832. And that comes directly from the income statement that we see directly above. That's from right here. So it just kind of drops it down. This is this is related to this two separate but consecutive statements that we discussed. So it reports the net income here from the income statements, and then it reports the other comprehensive income items. Oops. And you can see that it says net of tax, and it lists out all the other comprehensive income items that they have. And then in total, they add up to their total comprehensive income right here. So this is just to give you an example. Just like the net income, when you go see net income on an income statement, let me just go into slide to presenter mode. Just like from an income statement, the net income flows into retained earnings and accumulates in the retained earnings. The other comprehensive income is accumulated accumulated every year into an account called accumulated other comprehensive income and reported on the equity section of the balance sheet. Here's an example of how we close out other comprehensive income into accumulated OCI. This is very similar to how we close out our income statement items into retained earnings. So just to kind of separate the two so you can clearly see, here we have how we close out net income, and we would, in this example, we would debit our gains and revenues, credit our expenses and losses, and then the plug would be to the retained earnings account, and that would be that's how we close out our net income for the period. Similarly, we do the same thing for other comprehensive income, where we look at our gains and losses and record the opposite of them in order to close them out, and we report it into this accumulated OCI, which is an equity account. And you can see, just like retained earnings, accumulated OCI is a roll forward, taking the prior year plus current year other comprehensive income items to get to your end of year accumulated OCI. Following that same example, just to give you a view of the equity section of the balance sheet, here's a condensed version just for purposes of seeing the effect. We have our assets and liabilities, and then we have our shareholders' equity. We have our common stock, we have retained earnings, and then we have the account called accumulated other comprehensive income, which is from right here. And this is from our roll forward, where we take into account our current year OCI items or other comprehensive income. And that gives us our total liabilities and shareholders' equity. This is just another example of a separate statement of statement of comprehensive income, just like the Microsoft kind of reported it, where it starts with the net income number from the income statements that's reported right above it, and the OCI items for the current year to give us the other comprehensive income, and then we get total comprehensive income, which is the net income plus other comprehensive income. And again, you can see that the equity section is made up of the common stock, additional paid-in capital in this example, retained earnings, and accumulated other comprehensive income, some treasury stock, but it all goes into the total shareholders' equity reported on the balance sheet. And here's just that roll forward. You should want to note real quick that no matter what classification an item is reported, whether it's reported in net income or other comprehensive income, since both of those all flow into the shareholders' equity section, in total, your shareholders' equity is not, the total shareholders' equity reported on your balance sheet is not any different than if you were to switch between net income and other comprehensive income. So in this example, if a company reports $10 million of gain, we'll call it net of tax, in net income, then the retained earnings will be higher by 10 million. Instead, if they report the 10 million in other comprehensive income, because it's a different item, so these are talking about two different items, not the same item, because the same item not report, you can't just pick and choose which category your transaction falls into. There's a very specific transaction that fall into other comprehensive income. But if a company has $10 million gain in other comprehensive income, then the accumulated other comprehensive income will be higher. And either way, your total shareholders' equity is higher by $10 million. Further, in the second semester of this intermediate accounting course, eventually items in the accumulated other comprehensive income are reclassed to retained earnings, but that's further down the road. And then really quickly, just the difference, to point out the difference between US GAAP and IFRS, which stands for the International Financial Reporting Standards. It's right up here. US GAAP allows companies to report comprehensive income in either a single statement of comprehensive income or in two separate but consecutive statements, which is how Microsoft reports it. IFRS allows it the same way as GAAP. However, IFRS has an additional other comprehensive income that US GAAP does not, and it's called changes in revaluation surplus.